Hello, everyone, and welcome to Interacting with Canadian History. Today, we're going to talk about the crash of 1929, the stock market crash of 1929, and the Great Depression. Okay, so first, we're going to talk about our learning goals. Our first learning goal is to understand that there are multiple causes of the crash of October 1929. Um, the second is we're going to understand that the crash of 1929 was only one of the many causes of the Great Depression. And we're also going to try and understand the worsening feeling of panic that started in 1929. So first, let's talk about a very important event, Black Thursday. On Black Thursday, October 24th, 1929, the stock market went haywire. People were selling like crazy. This happened in New York to the tune of 12.8 million shares. Toronto was also sold. Toronto stock market also sold incredibly many sales, the most they had sold in years. Uh, Almost every stock in North America lost value on this day alone. On Black Tuesday, less than a week later, there was an even worse crash than Black Thursday. This would precipitate for the rest of the 1930s, and by the mid 1930s, or by mid 1930, most stocks had lost at least 50% of their value. That is incredible. So imagine you invested $1,000, $10,000, $1,000,000 in stocks and losing half of your money. That. Imagine taking all the money you have and dividing that in half, and that's how much money you have now. That's what people were feeling. That's how many of even the richest of the rich lost their fortunes with this crash. Oh, sorry. Then into the 1930s. By July 8th, the Dow Jones, which is what they call the industrial average, which basically means it's the average of the biggest uh, certain number of stocks. The numbers change over the years, but it's the biggest. It's the average of all the biggest stocks. Okay, it was down 41 points. Now, that may not seem like a big amount, but when you only have 381 points in total, that's a large loss. And it was at a record high just a month ago, almost 2 months ago. And every stock continued to fall as people continued to sell in order to pay off their loans to stockbrokers. Now, this is an interesting thing. People would buy loans with credit, buy stock with credit. We'll talk about that a little bit more later as we take a look at this graphic. If we take a look here at this first arrow, okay, we take a look at this first arrow. What do we think this is representing? So this graphic here is the Dow Jones average over the course of the 1920s to 1945, by the end of World War II. So what do we think? This arrow here. Take a minute, think about it. Talk to the person next to you. Excellent. So this number is the lowest that the stock market had been in decades, right? And people thought, oh, it'll never get this bad, it'll never get this bad again. And in fact, the stock market continued to rise throughout the 1920s, creating a period that we called the Roaring Twenties, where people thought, life is good, the economy is booming. What can go wrong, right? And people kept buying and buying and buying stocks, raising and raising and raising the prices. Okay, until we get to 1929. In 1929, we get to what we call a bubble. The bubble gets bigger and bigger and bigger and bigger, and as everyone knows with bubbles, the bigger they are, the easier they are to pop. So of course, eventually this bubble bursts in October of 1929, and we see a continued decline until we get to 1932, which we talked about on the last slide, reaching a low of 41 points from a high just 2 years ago, of 381 points. Like I said before, that's almost a 90% decline. Okay, and we see throughout the 1930s, actually, the stock market continues to go up to about mid 20s levels. So we don't get to the 1929 high of before, and we'll talk about why later. But we do get to about the same level as mid 1920s. So the Great Depression, as it is seems to be on its way out. And of course, by 1939, we all know what happens then. World War II starts, and the economy kind of kicks back into gear. And by the end of the war, you see we're pretty much back where we started. All right, so how do we get here? How do we get to such a precipitous crash that rippled through the whole economy and took people away from their homes and their fortunes and their lives? Well, not just the rich were playing the stock market. This is very important to know. Average middle-class families who were on the rise in the 1920s were also investing heavily because they had all this spare income, right? With their new jobs, their almost guaranteed job security after World War One, with it really being a job seekers market. So they were able to invest very, very heavily in the stock market. Then this is what I was talking about before with buying with credit. It's called buying on margin. Basically, you're using what we would call credit cards or to purchase stocks. So it's with money that you didn't have, but someone else was basically footing the bill for you to have that stock. Now, why is this a problem? This is the problem. Brokers could make what's called a margin call. Basically make people pay the money that they owed, money that more often than not they didn't actually have, because people were spending and spending and spending because they thought that this was never going to end, this high that we were getting to. And chaotic price rises and falls during the months of September and October due to random buying and selling. People who just had this credit that they could access so easily and thought, hey, this isn't my money. I'm not spending my money. I can spend this. And maybe I'll make tons and tons of money because my neighbor made tons and tons of money, or this other guy did. And that's the way most middle-class families thought in the late 1920s. And many brokers began to sell due to the chaos. No one answered the margin calls. No one paid them back. Because like I said before, they didn't have it. They didn't have the money. And so these brokers began to sell the stocks on their clients' behalf, which, in order to recoup their costs, right, because they wanted their money back. They were like, this is getting too crazy for me. And so, with millions and millions and millions of people selling their stocks, the market went down, right? The way it works is if people are buying lots and lots and lots of stocks get more expensive because people see them as more valuable. But if everyone is selling, that means that they're not very valuable. So then we get to this time that we call the Great Depression. Basically from 1930 to about the end of the 1930s till World War II. It's depicted as a period of extreme poverty and economic hardship for all Canadians. And it, for the most part, was. Now, it's very, very, very important to notice that this affected all of the developed world. Europe was experiencing a Great Depression before the Canadians were, but we're going to focus in on the Canadian experience here. So, how do we get to the 1930s, man? So, the stock market crashed and continued to fall starting in October of 1929, causing many people to lose their life savings like we've already talked about. Unemployment skyrocketed. And when I say skyrocketed, I mean an increase of almost 450% from 1928 to 1930. By 1933, unemployment had peaked, increasing over 1,000% from 1928. Now, let's put these numbers in perspective. That means that imagine today, pre-coronavirus pandemic, we had about a 2 to 3% unemployment rate, right? A 400% increase, it turns it to about 12%, probably more than that. And 1,000% increase turns it to more than 20%, more 2 to 3% initial to about 20 to 30% unemployment. So imagine 30% of people can't work. They want to work, they can't. Because there aren't jobs, because the stock market has crashed and companies are downsizing. Basically, people don't have money. These middle class people who thought that their job's security was so high, and it was in the 1920s, and they were making tons of money. Not tons, but more money than they ever had. They had more disposable income. Those same families are now totally out to lunch, as they say. Moreover, drought plagued the prairie provinces, which basically mean that drought is when you have no water, no rain. You know what happens when there's no rain? No wheat. Even more than this, there was a massive decrease in the value of wheat because people couldn't buy food. So couldn't sell your wheat to anyone. So the price went down because it's less valuable to people. This is a graph of Canadian unemployment from 1929 to 1940. Like we said on the last slide, you see it peaks here around 1933. Look at 1929. Look at the unemployment rate. About 2%. About 2%. And less than that even. And by the time we get up to 1933, we've got almost a 12% unemployment rate. That's incredible. That's really, really incredible. Even look at 1928, the year we were talking about before. Probably about a 1% unemployment rate if we take a look at this chart here. To get to here, from here, right? Originally 1 in 100 people couldn't find a job when they when they were looking for it. Now, in 1933, midst of the Great Depression, about more than 1 in 10 people couldn't find a job. That's insane. That means that we lost 10 we lost so many jobs. 10 jobs. 1 in 10 jobs. 1 in 10 people couldn't find jobs. 1 in 10 from 1 in 100. That's crazy. And it becomes very obvious now that the stock market, while it made us lose a lot of money, right? Made our rich lose lots of money. It made our middle income families lose lots of money. This made them not able to get it back. And in fact, look how quickly it went up. Even though it was going up and down, whatever before. This is normal. This is okay. Even this is okay. To roughly change in percentages. But how quickly this rose, that's the incredible part here, the part that was unprecedented. So, who lost? Well, rich and middle class lost money in the stock market. The middle class and the working poor lost because of unemployment. Rural farmers lost due to drought and decline in the price of wheat. And as we see in this picture over here, this is what we call a lining up to get food. They would line up for hours in order to get food. And I like the little irony of this picture here. World's highest standard of living. There's no way like the American way. And these people are sitting outside waiting in line for their daily bread, so to speak. However, an important thing to remember is that the super, like the highest levels still had money, still had a way to party. So let's play a little game. Let's play a little game called 20s or 30s. So remember, the 20s are characterized by massive parties, booze everywhere. The prohibition, didn't stop people from going out and drinking. And the 30s are characterized by squalor and total lack of amenities. So let's play this game. Is this a picture from the 1920s or the 1930s? Take a second, figure it out. And if you guessed the 1930s, you are correct. So, this is an example of what I was talking about before. People who were rich were still people who were super rich, like the top people were still in the top. They still had money to buy drinks, to go out and party, to wear their fancy suits. Alright. 20s or 30s. Now remember, the 20s characterized by massive parties, wealth, everything like that. In the 30s, well, people characterized to look like this. And guess what? This was in the 20s. This was a low-income family in the 20s in Canada. This is their house. Their whole house. Where they had all of these children. Next. One family eating what looks to be some sort of oatmeal and sharing this glass of milk. And this is the 1930s. This is what the prototypical 1930s was, right? Don't get confused. People were still very, very, very poor, the average person. The multiple families working and living together so that they could save on their heat, on their food. And they lived wearing clothes, that they sewn together, that they couldn't afford to buy new clothes. All right, 20s or 30s. Another more extravagant picture. Maybe some of this might help you out a little bit, some of their clothing, if you're familiar with the 1920s. And if you guessed the 1920s, you're correct. I kind of gave it away a little bit there, though. All right, so in summary, there are several causes of the crash, and also several causes of the Great Depression. The crash being only one. Remember, we talked about unemployment. And the price of wheat going down incredibly. And the drought also causing there to be not enough food and farmers to not make enough money. Okay, so nothing was inevitable, right? Nothing's inevitable. I like to think about it like that. How could the Great Depression have been prevented? Think about things like money lending, buying on margin, we called it that. Things like income inequality to start out. Things like the margin calling, so massive selling all at once. And overall, a lot changed from the 1920s to the 1930s for your average Canadian. The Roaring 20s gave way to what we call the Dirty 30s. Tuning in to interacting with Canadian history, we talked about the Great Depression today and the stock market crash of 1929. Hopefully you enjoyed it. Have a good day.